I just wanted to make a short video talking about this subject because a lot of people don't fully understand why you should invest in a global ETF. So I have some points written out so I can discuss them. Most professional managers will lose money if they invest, and investing is a game of knowledge and luck. So the question you should ask yourself, what makes you think you can actually win in this game? So if you look at a lot of actively traded funds and so on, they often fall short for the simple reason that, say they buy Microsoft, they bought it like 10 years ago, they most likely sell it within a year. While if they sit still and didn't change anything, that one holding would have outperformed all their other holdings, and it kind of skews their return in a negative way by selling winners as well as selling losers. And this is why a passive ETF is a good thing, because if you have one company in that passive ETF outperforming and that keeps outperforming, it will eventually grow within that passive ETF into a larger part of that ETF, so to say. Actively trading leads to bad decisions. You have panic selling. A lot of people, especially on YouTube, I noticed they chase trends. They want to buy the next quantum computing company, and I think this will continue far into the future. It's nothing new, and investors will still keep on doing this bad mistake, chasing trends, instead of actually just investing in good companies, sitting on their ass for 20 years and becoming rich. So a global ETF forces you to be passive, which historically leads to a better result. It might not be outperformance, but it will be average. So you own thousands of different companies worldwide. If the global economy grows, if companies grow within the passive ETF, so does your money. It's quite simple. The companies in the ETF that fail, they will eventually vanish. Of course, there will be new companies that take their place. Global ETF automatically adjusts. Losers automatically gets removed, and companies that wins, and more importantly keeps on winning, are kept within the ETF, if this makes sense to you. And if you're an individual stock picker, it's much harder to buy a company, see it go up, and then guess that this company will keep on winning for the next 5, 10, 20 years. There are many things that can happen, management can change and so on. And you're not tied to doing a lot of research. You don't need to research the market, you don't need to research individual stocks, you don't actually need to know anything. And you're basically accepting that you know nothing when you buy a global ETF. And that's perfectly fine. So basically you're just betting on human progress. Despite wars, despite recessions, the global economy will grow with time. That's basically what you're betting. And this promotes the buy and hold mentality, which leads to the outperformance when you look at the passive ETFs compared to active ones. It kind of converts into my channel name. Simplicity is the same as success. If you keep things simple, you're more likely to succeed. And that's why I say, when someone asks me, what should I buy today? I always say, buy a global ETF. That's all you need to know. If you need to know what to buy today, this second, just buy a global ETF. Not financial advice. Bye.